take a look at the retail ETF XRT, down around 18% since October, on pace for its worst quarter since 2008. Can the sector turn things around with the holiday shopping season heading into the home stretch here? Joining us now for ETF Spotlight, one of the best picks of retail in 2019, one of his best picks is John Kernan, senior retail analyst at Cowen. Before we get to your pick, John, what's with the dismal performance of retail? XRT, I mentioned the quarterly performance. It's down more than 11% this month. What does it reflect about where the market thinks the consumer is?
Yeah, hi, Sarah. Thanks for having me. It's been a brutal 3 months for consumer. There's been big drawdown in valuations, over 20% plus in some cases in terms of just the overall change in PE multiples in the space. I think people are worried about where we are in the business cycle. They see the general market volatility. They're worried about how that might affect the consumer, and they're worried about tariffs, particularly as it relates to retail.
Right, in case we see a higher rate or more tariffs go through on China if Xi and Trump don't make nice, John. So what's your best idea for 2019?
Our best idea in 2019 is Lululemon. The stock has had a big drawdown here in terms of valuation from its peak over the summer. We think there's a couple positive catalysts for Lulu in 2019. We think very early in 2019 they'll be able to raise their Q4 outlook at the ICR conference. We think that's a good catalyst. We also think their new CEO, Calvin McDonald, will be able to issue higher long-term targets for sales and operating margin as we go forward. So I think those are two good catalysts. The stock's down to 27 times forward earnings. Historically, that's a fairly cheap multiple for Lulu. And if you've been patient and bought the stock at that valuation in the past, you've done pretty well.
The only thing I'd say, John, is that it doesn't sound too original. Stifel just came out yesterday with their best idea for 2019 as Lululemon. And the entire sell side loves this stock. I think 70% of you guys have a buy, which is the highest amount ever.
Yeah, it does feel a little bit more crowded. The stock has come down significantly, and I think valuation is what is enticing people here and just the quality of the franchise. But yeah, we've had a buy in it for a long time. Some others have joined us from the sell side. But I think people look at the overall quality of this franchise, the potential upside to consensus estimates, and just the valuation contraction, and they see a fairly attractive scenario. And across the rest of the space, there's a lot of uncertainty as it relates to tariffs and kind of where we are in the overall cycle.
And I'll ask you, because you cover Nike, the company is going to be out with earnings on Thursday. It has broadly been a winner so far this year. Can Nike keep up the outperformance?
Nike's an expensive stock. That's also a fairly consensus idea on the sell side. We're market perform on Nike. We've been market perform for almost 2 years. We've preferred Adidas, which has performed better from a stock perspective than Nike over the last 2 years. This has been a good year for Nike stock, but the stock is still expensive. We would stay on the sidelines. I think the upside to the Q2 numbers are pretty priced into the stock right now, and we'd stay on the sidelines on that one.